All right, let's jump straight into this explainer. Today, we are putting on our prosecutor hats to brutally stress test Micron Technology. We need to figure out, are they a structural AI winner or just another cyclical trap waiting to destroy capital? We're going to approach this as highly skeptical institutional investors, evaluating a massive, high-stakes capital deployment of 1,000 crores. For us, risk-adjusted returns absolutely trump industry optimism. Let's get into it.
I want to start by completely shattering a major misconception right off the bat. Everyone talks about AI's brain, but almost nobody talks about AI's bloodstream. Think about it. The assumption that AI is purely a GPU play? It's entirely wrong. Yes, GPUs are the brains, but without memory to actually move the data, the entire system suffocates. Models can't train, data can't move. Memory is the bloodstream.
And this really highlights the core conflict we're looking at. While the broader market is obsessing over the compute brains, your NVIDIAs and AMDs, we are going to interrogate the critical, highly underappreciated infrastructure that actually lets AI scale. Because frankly, AI simply can't scale without memory. It has become the absolute critical bottleneck in this explosive infrastructure growth. And that right there is exactly where Micron lives. Section 1. The memory oligopoly. So, as ruthless financial forensics experts, the very first thing we have to verify is the industry structure. Look, we aren't dealing with a fragmented, race-to-the-bottom commodity market anymore. Today, it's a heavily concentrated oligopoly. The global market share is effectively locked down by just 3 players: Samsung Electronics, SK Hynix, and Micron Technology. And why does that matter? Because only these 3 have the billions in capital required just to survive, which massively reduces irrational competition. Section 2, HBM yield and execution. To actually justify a capital deployment of this size, we have to look past standard memory and tear down the microscopic operational realities of high bandwidth memory, or HBM, the true prize of the AI era. Producing HBM isn't just, printing chips. From a technical operations perspective, it is a brutally complex manufacturing process. It requires advanced packaging, extreme thermal management, and absolutely ruthless yield optimization. A tiny, microscopic failure in yield management that can literally cost billions. The barrier to entry here is exceptionally high. So the crucial question is how Micron actually stacks up against the other 2 giants in their HBM positioning. Right now, SK Hynix holds the current leadership position. And Samsung, well, they have massive scale but face some real conglomerate complexity. But Micron, their process maturity, their technology leadership, and crucially, their U.S. strategic expansion, these pose a severe, high-stakes threat to its competitors. They're executing aggressively to close that gap. Section 3, financial forensics. Having established that technical moat, we've got to transition to the financials. And here we assume every single number is hiding cyclical risk until proven otherwise. Just look at this threshold. Over 50% of Micron's revenue is now tied directly to the data center. That massive AI revenue exposure proves they're rapidly evolving. They're moving from a cyclical PC commodity memory producer straight into a strategic AI infrastructure provider. Notice the trajectory we're seeing here. Overall revenue growth is hitting records. We're talking an FY25 revenue of about $37.4 billion. But the underlying HBM revenue growth, that is what's acting as the high-margin rocket fuel for this entire operation. Their HBM is essentially sold out for multiple future periods, which fundamentally shifts their underlying economics. But putting that prosecutor hat back on, I have to point out something. While these surging gross margin and operating margin trends look absolutely incredible on paper, we must constantly ask ourselves, how much of this profit is structural AI demand and how much is just a temporary cyclical pricing boom? Let's be real, memory companies are absolute masters at looking amazing right near the cycle peaks. Case in point right here, their ROIC, or return on invested capital. Historically, this metric fluctuates wildly because of brutal memory cycles. What does that tell us? It means Micron isn't a highly predictable software compounder like Microsoft or Visa. Even with the AI tailwinds, deep down, it remains an infrastructure company with cyclical DNA. It's a similar story with their free cash flow. Sure, generation can be massive during these AI booms, but we can't forget the sheer capital intensity of this business. Building new chip fabs, funding technology transitions, it consumes cash ruthlessly. They literally have to continuously reinvest billions just to stay in the game. However, and this is key, management has fortified their balance sheet.
They maintain a massive cash position and keep their debt levels strictly controlled. Listen, memory downturns kill weak players, but Micron's investment-grade fortress liquidity ensures they can survive the inevitable cycles that completely destroy weaker chip makers.
Before we wrap up the financials, we absolutely must acknowledge the divide in their product economics. On one hand, their DRAM leadership provides a phenomenal high-margin AI engine with a very strong moat. But on the other hand, their NAND storage business remains highly competitive, it has lower margins, and it's heavily exposed to historical storage cyclicality. It's really a tale of two businesses.
Section 4, the risk matrix.
Okay, now that we've seen the massive upside of this strategic pivot, it's time to try and completely destroy our own thesis. We're hunting for fatal flaws. These are our absolute thesis breakers. If the cloud giants suddenly slow down their AI capex, if Micron suffers an HBM market share collapse against SK Hynix, if the broader industry returns to structural DRAM oversupply, if there's a major technology execution miss, or even a sudden balance sheet deterioration, if any of that happens, the valuation multiple will compress violently, and we will pull our money. The single biggest risk here is forgetting that memory, at its core, remains cyclical.
Section 5, capital deployment strategy. So based on this grueling cross-examination of the oligopoly, their execution, and those brutal cyclical risks, we are finally ready to issue our verdict on the 1,000 crore deployment. Look, the market valuation currently underestimates Micron's structural AI potential. It's trading closer to a cyclical company than an AI winner. But we must protect our downside. We aren't going to deploy blindly. We're approving this allocation in strictly gated phases. Phase 1 is a 300 crore initial position just to capture the validated AI thesis. Phase 2 unlocks another 300 crore, but only upon confirmation of flawless HBM execution and margin expansion. And finally, Phase 3 deploys the final 400 crore only if sustained AI infrastructure demand and industry discipline actually hold up. We demand continuous proof. As we wrap up this explainer, I want to leave you with a provocative thought. AI simply cannot scale without memory. The transition from a commodity producer to a strategic infrastructure provider, it's real. But are you, as an investor, disciplined enough to navigate the volatile reality of AI's bloodstream? Or is your portfolio still holding on to the illusion of predictable, straight-line growth? Know the cycle, respect the risks, and deploy your capital accordingly.